This is the briefing for Friday, March 14th. The rally that we saw in today's trading was very interesting, but when you look at it in terms of price development and price structure, it says a completely different story. Now, this was a very good rally in today's trading. We had a gap up this morning. This is the spiders on a 60-minute basis, the Qs on a 60-minute basis, and the IWM on a 60-minute basis. So what's easy to see here when you look at the chart is that this is just simply a rotational pattern where we had a test of the lower extreme, test of the upper extreme, test of the lower extreme, and then today a test of the upper extreme. And in fact, if you look at this, you can look at it very carefully, you can see that they tried to take it above the 564 area, 565 area, but sellers came in and drove it right back down. The same thing happened. There's a selling tail in the Qs as well. So it appears that what happens on Monday is just going to be extremely important because we trade much above the 565 area in the spiders and the 480 area in the Qs, 204 area in the Russell. That's going to then suggest the potential, or at least increase the probabilities, that we have reached a bottom and we're going to see some type of greater degree rotation back to the upside and maybe even a test of the all-time highs. Now, looking at where we are in perspective to the other day's trading, you can see that volume was extremely low in today's trading in the spiders. We got a little bump up in 52-week highs minus 52-week lows, but still negative 148. But breadth was fairly strong, 1,661 shares positive. So you can see this area here, the rotation that we've been in for the last 4 days of trading, that breaking that upper extreme at the 565 area is going to be very, very important. So watch what happens very carefully. Now, if we do open up higher, and there's always a chance at the open that we open up and we open up higher, and then of course watch what happens with breadth. If it's weaker, that's a sure signal that the possibility of a false breakout is increasing, and you could see rotation back through the range. We have seen this before in this decline, where we see a really good day of trading and then we see it completely retraced. Now, here's a good example. Here's a fairly good day of trading, testing the 577, 578 area, and the next day it was completely retraced. So that's pretty significant. And then we had the continuation of the move lower. So you can see even in today's trading, you can see this right through here. Look at how low volume was even compared to the rest of the day's trading. Same thing with the Qs. Look at how low volume was during most of the day's trading, with a little bit of tick up going into the close today. Looking at where we are with the IWM, you can see it's still in about a 5-day rotational pattern, not really even getting up high enough to test the 205 area. Volume falling off, breadth expanding nicely, and that basically is typical in a counter trend rotation or a pause area. And I covered this last night for subscribers that some of the characteristics of a counter trend rotation are that they occur on low volume, they occur in a pause phase, a rotational pattern, and or a 3-step counter trend move, where a lot of the time, not all the time, leg 1 is equal to leg 3. And they occur on low volume, and they work off an overbought or oversold condition fairly quickly. Now, we've been in this rotational pattern in terms of the spiders and the Qs in a 4-day time period. But if we look at where we are in terms of overbought and oversold, you can see that we are extremely overbought in the NYSE and even more overbought in the NASDAQ. Now, I want to caution, this does not preclude the indices from trading higher on Monday, but it does suggest that as we look at all of the information the market gives us, that the probabilities are such that potentially we should see some type of rotation back to the downside, rejected by this upper resistance area of 565 in the spiders and 480 in the Qs. So Monday is going to be critical. If we trade and we close above these resistance levels, then that's going to suggest the next upside resistance is potentially in the offing. Now, looking at some of the other internals, you can see the S&P, the percentage of stocks above the 50-day moving average and the 200-day moving average are still declining. So you can see the deterioration within the indices themselves. The same thing in the NASDAQ. You can see really declining in the NASDAQ. Only 26% of the stocks in the NASDAQ are trading above their 50-day moving average, and only 34% are trading above their 200-day moving average. In the spiders, you can see it's about 32% above the 50-day moving average and 38% above the 200-day moving average. The Russell, a little bit different, only 19.9, almost 20% are only trading above their 50-day moving average, and in the 200-day moving average, only 29.54% trading above the 200-day moving average. So I would have to say that while we don't want to see in a trend the internals strengthen to support that trend all in one day, because that can be a sign of exhaustion. But what we want to see is we want to see the internals building in strength in the direction of the trend. So we know that it is the price development is supported by the internals of the market. And right now, today's rally, while it was decent and took us right up to resistance levels, the internals are such that I would suggest caution on long positions unless or until we trade above these resistance levels, trade above today's high, and we see the internals strengthen more than they strengthened in today's trading. Any more weakness would then suggest a potential false breakout or some type of rotation back to the downside. Have a great weekend, and I will pick this back up on Monday for subscribers.